Uh, I think the best traders of oil are the Chinese, and so they're the real, the power underneath this all is their buying of Iranian crude.
They put the bid on oil.
They put the bid on Iranian oil, so they're the main buyer by far. 80% of Iranian oil is, a lot of it actually goes to Malaysia and then is reflagged. So you see that Malaysia exports more oil to China than it produces oil. So it's obviously smuggled. And basically the other manipulation is the White House turning their blind eye, and this is the second administration that's done that, to all these sanctions. So, you haven't really interrupted Russian oil despite all the sanctions. Iranian oil, as of today, is still flowing as it was at, recent very high levels compared to history. And so there has been, concerted efforts not to get the oil interrupted, and nobody, including Iran, wants to interrupt the oil. The other thing here is that, people seem to think that there's some sort of gate at the Straits of Hormuz when they talk about closing the Straits of Hormuz. They think Iran has the power to do that. The real question is, does Iran start shooting missiles at tankers, which is, really going to be dramatic if it happens. And of course, that's what happened in the tanker war of the 70s between Iran and Iraq, where they were both firing missiles. And that's actually what got us the 1970s high in oil prices, which was over $100 a barrel.
Given that background, why isn't Brent crude north of $100 today?
There's plenty of oil, and Chinese demand is weak, supply is abundant. I think, to me, Tom and I have known each other 25 years. What's so extraordinary about the current market is, firstly, that we're at 103 million barrels a day of demand. An extraordinary number. 103 million barrels a day of every day. So this is like 1,300 barrels a second of consumption. But even more extraordinarily, which we would never have thought you could do 20 years ago, you've got capacity of 108 million barrels a day. Okay. So there's actually 5 million barrels a day spare. The interesting thing about the spare capacity is it's all in the Gulf. So the market is clearly, further to the answer to your question, is the market is thinking that the risk of interruption in the Straits of Hormuz is low, basically because China, US, Europe, everybody, Saudi pretty much, maybe less so, want the oil to keep flowing, and that the Iranians' only source of revenue now, dollar revenue, is going to be oil. So it's difficult to see exactly who wants to shut the Straits of Hormuz. And I think the odds on various betting sites are far too high. It's actually quoted at 30% chance the Straits are shut by the end of June, which I just think is extremely unlikely, because I don't even know how you would shut it short of sending missiles.
If you take the risk premium, assuming there's some risk premium in global crude today, if you take that out, is the market still pushing this commodity lower?
Yes, I think so. I mean, I think that, we are in a plentiful supply situation. The one thing that hasn't turned out well for the bears has been that demand remains pretty strong, particularly Middle Eastern heat. So we saw a very cold winter globally in the key markets, which would be Northeast Asia, Europe, and the US. That gave us a lot of extra demand, over a million barrels a day of extra demand just on weather in Q1. And now we're getting a good 400,000 barrels a day of extra demand because of the massive heat that we've had in the Middle East. If you think it's hot in New York today, Abu Dhabi recorded 53 degrees, I think, which is 127 degrees in the shade in May. And as a result, exports have been a bit constrained. Now, having said that, Saudi is now, all of them have now started sending as much oil out of the Gulf as possible. So we really need some incremental geopolitical disaster to make oil go higher here.